every 10 years, give or take a year or two, we have a banking crisis.
What does the world look like after a crash like the one that you just described?
It is a more serious situation, potentially, than what happened to Germany in 1920 to 1923.
Do you expect us to move on to a digital currency right after this happens, like, as you said, in the next 12 months?
Money is physical gold, physical silver, and the possession of it. It's as simple as that. Everything else is credit. We're getting to the point where, we can't buy any more time.
How would you position yourself to profit from this everything bubble instead of just protecting your wealth against it? Because I don't have much to protect right now. So could you try and paint me a picture, though, on what the aftermath would look like? Like, what do rates look like? What does GDP look like? Where's real inflation? How's unemployment? How's housing? All these important things that are, actually important to average Joe, uneducated people like myself. What does the world look like after a crash like the one that you just described?
Well, I could paint a very bleak picture. I think the better thing to do is rather than answer your question, which I think would probably make people think, what I would rather have is I'd rather have people think this one out for themselves. So in that context, what I would say is just think one thing, and that is, how likely is it that there will be a banking crisis in the near future? I mean, by the near future, let's say within 12 months or so. Now, think about that in the sense of what you see in terms of the money printing that's happening, the deterioration in collateral quality. Think about the effect of interest rates on the very high levels of debt in the private sector. Think about the level of interest rates on government finances. And then think about, what a crisis, a banking crisis. And I can tell you, and this is not controversial at all, that every 10 years, give or take a year or two, we have a banking crisis. It either comes out as as banks failing, or it comes out as, overextended lending to property, and you get a property crisis, which was the situation we're seeing now in China, and the same situation we saw in in America with the Lehman crisis. And we saw this in the UK in 1973 when interest rates rose and the complete commercial property market just collapsed like that, and it took down a whole plethora of smaller banks. That's a regular one. Another regular one is, we just get a recession and or a slump, and under those circumstances, what happens is that the banks start calling in their loans. They call in loans from businesses. And the problem is that the collateral that's been put up starts going down in value because it's a stock market crash as well. And so the banks are forced to sell into a crashing stock market, which makes the whole thing worse. That was 1930 to 1932 in America. Mm-hmm. Now, these are just examples of what happens. But the one thing that is constant in all this is the regularity with which these crises occurs. The only interruption is when you have wars, and that skews things a bit. But basically, in peacetime, every 10 years, give or take a year or two, you get this crisis. We are overdue one now, as far as the world is concerned. The amount of debt, in the world, both in governments and also in private sectors, just think about the effect of rising interest rates because of the inflation, the price inflation that's going on at the moment, which is the consequence of earlier money printing. Just think what that's going to do to the banking system. And after that, you just make up your own mind as to how you're going to navigate your way through this. Do you want to be entirely exposed to this world of fiat currencies with banks who are undercapitalized and have very limited ability to absorb the financial shocks that regularly happen every 10 years? Is this something that you don't want to have some protection from? That's the question you need to ask yourself. And then From that, you need to decide how much protection you need. If you think this is okay, I'm not that worried about it, then I would say have a little bit of insurance. Have just something outside the fiat money system. And incidentally, the only thing outside the fiat money system is not property. It's not art. It's basically physical gold, physical silver. Have a little bit of that. If you think this one through and you say, oh my goodness, this could be a real disaster, then have some more gold and silver. Make sure it's physical, not shares in mining companies, not derivatives. Always go for the physical, because really what you're looking to do is to insure yourself and your family against the possibility that the whole of this situation is going to come crumbling down.
Okay, but what do I do in this scenario? Maybe I can ask you this in a different way. What would you do if you were my age, 26 now? You've never invested through so much of a serious long-term correction nor crash, let alone a great reset or a currency collapse, and you're just totally unprepared mentally to begin with. But in the same time, you have this desire that I have to build up your capital. How would you position yourself to profit from this everything bubble instead of just protecting your wealth against it? Because I don't have much to protect right now, so I might as well risk it and try and make a buck on top of it. So how should I approach this?
Well, I think one thing we must make clear is what the difference is between investment and money. Cash money is not an investment. Cash money is something that you spend. So the point about accumulating physical gold and physical silver is that they are cash money. It is the only form of money. Everything else is credit, okay? So what you need to do is to think in terms not of, I'm buying gold at, say, 1835, which is the current price, and I've listened to some guru and he tells me that it's going to $2,500. I'm going to make a profit. No, that's not what you do. What you do is, at the end of the day, you will spend that gold or silver. And that is the key thing. Now, anything else you do, if you want to, speculate in Bitcoin or in mining companies or whatever, that is investment, or it is speculation or investment. I mean, it's the same thing really at the end of the day. So that is something that you do. And, I'm not in the business of giving investment advice. That's something that you have to make up for yourself as to, what you want to do, what your objectives are, and so on and so forth. And another aspect of this is to think in terms of the money. I mean, at the moment, we've got very low interest rates. You can borrow money if you're comfortable with borrowing money on the basis that you can pay it back, then you should really be a borrower rather than a lender. I mean, it just makes no sense at all lending euros at zero. Why not borrow them at zero? That's a far better prospect. So that's another aspect. And the reason I mention that is if you go back to the German inflation in 1922, 1923, there was a man called Hugo Stinnes, who was known as the inflation king. And Stinnes basically ended up controlling around about a quarter of the whole German economy. And he did this basically by buying businesses which exported and earned in dollars. And dollars, of course, were convertible into gold at $20.67 to the ounce. And in those days, to give you an idea, I mean, people think, let's hedge into property. You could buy, in 1923, you could buy a really nice large house in Berlin for $100. $100 being less than 5 ounces of gold. So, the problem with property was that it became actually pretty well valueless, because rental property required maintenance and you couldn't afford to maintain property. So on that basis, it became valueless. The rents that you achieved, of course, rents are always fixed in arrears, and you've got You will have a rental contract which runs a year or two or whatever before you can renew it, and you're stuck at the old rate. Meanwhile, the purchasing power of your paper marks is going all the way down. So, that's not good either. And these lessons are actually very important, and they're forgotten. Now, the big difference between the German hyperinflation in 1922 to 23 was that besides other countries suffering a similar fate, I mean, you had Austria suffered from an inflation which was just slightly earlier than the German one. You had Hungary, I think, as well. And of course, you had Russia, which was going through the sort of post-revolutionary change and all the rest of it. The Chauvinets, which was the currency, collapsed at that time. But apart from that, the rest of the world was basically on a gold standard. Well, Britain wasn't. We didn't go back onto it until a few years later, and then it was a bullion standard, as I said earlier. But, the dollar became the international currency because it was backed by gold. So, you could actually do things with using dollars. So you had a currency which you could use. If we get the sort of crisis that appears to be brewing, it could be that it leads to the destruction of all fiat currencies because none of them are backed by gold at all. And under those circumstances, there is nowhere even for a Hugo Stinnes to hide because, he can't earn the foreign currencies against which the paper mark was devaluing. It is a more serious situation potentially than what happened to Germany in 1920 to 1923.
You just said that the dollar became the international currency. But what would replace it this time? Do you expect us to move on to a digital currency right after this happens, like as you said, in the next 12 months?
Well, I mean, you referred to sort of history. I mean, if you look at the history of this, that's not very comforting either, because if you go back to revolutionary France, at the time of the revolution, and this is never mentioned by historians because historians actually know nothing about economics. They just don't understand it. They understand the social bit, but not the rest of it. At that time, there was a hyperinflation, and it was because the French government issued a new currency called the assignat. And the assignat was meant to be secured on church property, which the state had confiscated, because at that time the church owned around about a quarter of all the property in France. So that was confiscated, or large parts of it were confiscated, and the idea was that these interest-bearing notes were issued with the property as collateral. But of course, it was never formalized as collateral. It was just a joke. The assignat, they couldn't, they did one issue and that was absolutely fine. And then they couldn't resist doing another issue. Have we heard this story before? Then they couldn't resist another issue. And basically they just printed these things in increasing quantities. And, as the purchasing power of the assignat fell, then they needed to issue even more. So you had this hyperinflationary spiral in the assignat. Then someone had a brilliant idea. Let's have a new currency. That was the territorio mandat. That came out, and everybody heaved a sigh of relief. Get rid of those assignats. They're completely worthless. We've got this new currency. How long did it last? 6 months. That was it. And that is what will happen with digital currencies, because central bank digital currencies, because they're not backed by anything. They're just a liability of the issuer who has already destroyed, the previous currency. Who's going to buy that, for goodness sake? Nobody will buy into it. And this is the point that people like Carstensen at the Bank of International Settlements just don't seem to grasp.
So you don't think that it's going to happen, or if it happens, you don't think it's going to be long before people wake up to it and they understand, like, hey, instead of government stepping out, they created this mess for us. We're in this mess because of them. Instead of them stepping out, they're trying to step more into our lives with a digital currency, which is easily traceable. Your behavior is traceable. They can, they can block it or whatever. They can do whatever they want with it much easier than they could with cash. And you think people are going to eventually wake up to it and they're going to say, no mas, no more. We're out of it.
Yeah, I don't think it's going to work like that, because this is the point that everybody misses. And that is, we can sit here and sort of theorize that, over the next 2 years, we can do this, or over the next 10 years, we can do that. I mean, it's actually completely immaterial what we can do in 2 or 10 years. We can plan this and plan that. Why? Because you get a financial crisis, which will be triggered by rising interest rates. That is absolutely clear. But when you get a complete financial and banking crisis, which incidentally, I've just explained why it will destroy the Eurozone and therefore destroy banks elsewhere. How much are we going to have time to suddenly introduce these wonderful new things? No, it's not going to happen. I mean, it's going to be crisis first, solution second. That's what happens. It's not solution first and, crisis avoided. No. When the state is involved, they mess it up. It's as simple as that. So don't look for the state to rescue us from our current situation, which was created by the state in the first place. Okay.
But so that portfolio would mostly exist of physical metals that you can actually touch.
Sorry, can I intervene? I don't like the word portfolio, because a portfolio is of investments. We're not talking investments, we're talking about money. Okay. Now, if you hold an ETF, that's an investment. I'll agree. And the ETF might claim that it's backed by physical metal. Probably is. I don't know. I would expect it to be, but I don't have control over my share of an ETF. I've just got a bit of paper that says, this ETF claims that it owns gold or silver or whatever it might be. I can wave it as much as I like, but it's not going to magic any money out of the air for me. Money is physical gold, physical silver, and the possession of it. It's as simple as that. Everything else is credit. It's either a credit with a central bank on the other end who have mismanaged everything, or alternatively, it's a credit from a commercial bank in the form of a deposit where the bank owes you some currency. And the currency they will pay in is the stuff which the central bank issues. So, this is what we're trying to get away from. Or if we don't get away from it, the next crisis, financial crisis, could well just wipe them out. I mean, if your bank goes bust, what happens? The government says, we will ensure that it doesn't go bust. So they will print the money to ensure it doesn't go bust. So what does that do to the purchasing power of the money? Whoops, that goes down. They're taxing us. They're taxing us through debauching our currency in order to rescue them and us from the problems they have created. This is not a good deal. So I would strongly suggest that, forget the idea of investment. I mean, you can do what you want in investment. I mean, go and buy antique clocks or art or shares or whatever. Go and buy government bonds if you're really turned on by a government, though I think you'd be mad. But anyway, that's another matter. The point is that, this is very dangerous. The fiat currency system is now very dangerous. I would have a little bit of insurance against the possibility that the whole thing will turn out to be just a complete wipeout. I mean, we're getting to the point where we can't buy any more time. The next crisis, which is in the works now with rising interest rates, that crisis, I don't see how governments could really get out of it, because, I mean, next time they will print just an inordinate amount of money to try and rescue a system which is just completely failing. This would make the rescue after the Lehman crisis look like a tea party. I mean, it really would. So, the answer, I think, Antonio, is, just consider the seriousness of the situation, think about how you need to protect yourself. And that's a decision that only an individual can take. I mean, an individual might think Macleod is talking absolute rubbish and therefore I'm not going to be bothered to listen to him. Fine, okay, that's up to him. But if you think there's just a germ of a possibility that I might be right in being worried about what's going to happen to currencies and credit, then it makes sense to have just a little bit of money outside the system. And that money can only be physical gold and physical silver.
What is a little bit? Is it 5%, 10, 20, 50?
You're thinking in terms of portfolios again. Look at it as an insurance policy. I mean, do you think, when you insure your house, do you think of its part, the insurance premium as part of your portfolio? No, it's not. The answer basically is, as I say, I think it's for each individual to think through the risks to the whole financial system and make up their own mind. I'm sorry to say this, but it does mean that individuals, they've just got to educate themselves about what's going on. There's no point in me, trying to sort of persuade people that they should go and buy gold, buy silver, whatever. No point in that at all. The only thing I can do is to try and make people aware that there is a big risk out there, try and understand what it's all about, and then act in your own personal self-interest. That's all I can do.
It definitely makes a lot of sense. It's just, I have this concept in my mind where it's just, think about percentages. What percentage of your net worth that goes to this and goes to that and goes, but you got to sort of shake yourself off of that and think about a situation that I've never been in. That's why I also mentioned, like, how do I prepare maybe mentally for something like that?
Well, I can tell you that nobody alive today has been through this. In fact, no.